Hi there, traders, and welcome. Now, I've got on the screen, as you'll see, the Hang Seng. So this is the action from today. Okay, so I thought it was worth talking about. I thought it was worth going over, and I'll go over what I did do and what I didn't do. More to the point, what I didn't do and what I failed to see. And I want to talk more about a point about being biased into the market, coming into a market anyway, how it can really get you on the wrong side of the action. Not that you can create damage to yourself by getting long when you should be short, or vice versa, but by not getting in the trade and not recognizing the trade because you're biased one particular way. Okay, so we'll go over that. I've got these notes I've already put onto the charts. This was what I normally do anyway, to write up some notes, what I was thinking, and then I'll save it as a file anyway. But I've got the two charts. I've got the 5-minute chart from the action, and I've got the 1-minute chart on the Hang Seng. So coming into the session, this is the level that I was watching. It's around sort of that 25 120 thereabouts, just above 25 100. Okay, so it was a level from yesterday, and I was basically, for whatever reason, I got myself biased up. So I was expecting a bit of a bounce today. I was expecting the market to flush up and really start to squeeze out from shorts from yesterday. So if you go back and look at some charts, you'll see yesterday was just, it opened up and basically it was all session straight down. Okay, so it was just selling all session. And I thought that was overcooked considering US was up and other markets are doing well. We were doing well, yet the market actually opened up and went down again, as you can see from the chart there. So, like I said, I was biased up, and I shouldn't have been. So what I was looking for was this sort of pop here, hold, and then go. Okay. What you'll know is on the Hang Seng, not just the Hang Seng, but a lot of markets, most markets, especially the indices, if you come into a resistance zone, you're looking for one of two things really. The market knows it's a clear zone where you should expect some action from sellers and buyers, and you're really just waiting to see one or two things. Okay, the market's either going to go up, pull back, retest, and hold sort of a minor high low, and then what you're doing is bringing in some buyers, and sorry, you're bringing in some sellers in this case, and you turn around and squeeze them out with a continuation style trade up or a continuation pattern up, like number one. Then you've got the other way around. Okay, you've got pops up, traps some buyers above the session, above the mark, above the level, sorry, as in number two, and then you create that lower high and you sweep them all back out. So when the market wants to go up, it'll sort of pop up a bit deeper, like it'll get through the level a little bit further, and then on the pullback it's really shallow. Okay, and you're looking for that. But when the market wants to go down, it could easily just flush, trap some traders on the wrong side of the market, so like buyers into the market and turn around and squeeze them back out. So there were the two things I should be looking for. Now I was focused on number one because of what I said just before. Okay, and I shouldn't have been. I mean that caught me out. I didn't do anything. I wasn't actually trading long. I wasn't getting stopped out or anything. It just caught me out from actually getting in the short side. Okay, which you'll see a lot clearer on the 1-minute chart. All right, so I actually was watching this on the 1-minute chart, but for some reason I just didn't bother to go short. I was just believing that we're going to get a rally, we're going to get a rally, we're going to get a rally, and I just convinced myself after too long. So sometimes it's best just to turn around and walk away. Okay, refocus and come back and sit and look at the action from a fresh point of view. Okay, so we'll go over to the actually, just before I go, what I'm looking for, you get that lower high. You can see that market's pumped up, got a lower high. It was really starting to come into play. That's all you're looking for. Okay, so that lower high means that the market's trapped some traders through a resistance zone, taking out a level, coming back. The buyers have got trapped. They have to sell back into the market. Then you get new sellers into this lower high, and the market turns and squeezes lower. Now, you don't know how far that's going to go, but that's the idea. It's going to squeeze lower when it fails. Okay, and I've got the MACD, which I love to see. Momentum's starting to roll over. Stochastic's gone, it's in a prime position where it's gone from sort of the overbought, starting to roll back to the oversold level. And that's where we want to take advantage of that move down. Okay, these other little lines, so that's really the entry there. Should have been the entry short. These were where you could have entered from the 1-minute chart. Okay, when that momentum was down, it was pretty much solid down on the 5-minute chart. Flick over to the one, and you can see that's the action broken down into 1-minute chart. So you got the price moved up with really no clear bias, no clear buy entry up. There was no real pullback. It was just keep getting pushed. So algos are working overtime. They want it to a certain level. And then you've got some consolidation along, and that consolidation there, if it's long enough, it can actually generate a buy, but you really need it to break into new highs, okay? But instead, start to fail here. So I was looking at that. I didn't want to get long here, and I was thinking long, don't forget. We've got this little flush. That's what I wanted to see, okay? And it was in here that I was thinking about going long, okay? I wanted to see this break up here. I actually had an order just above this high. It didn't trigger to go long, and nothing happened. So the market was sitting on the MAs. As soon as we started to fail down to here, I actually was thinking short, but just could not press the button. I could not go short because of like what I said to the bias. And what you'll see Um, it was really, really nice. So it actually held that lower high, a little minor double top there. You could say inside double top. We call that an RTF failure, and started to go south. So you've got some buys in here, breakout traders that pullback, more buyers starting to buy in here because it was looking okay, and then that failed, and then it's turned around and squeezed them out. So it's got enough people trapped on the wrong side of the market to squeeze out, and you got the entry was basically through that 25.90, okay, 25.090, continued down. I was actually watching this as well, thinking about short, but again, my bias was playing on my mind and I didn't actually get short. I actually did get short a bit later on. Somewhere down here, got this sort of contraction. So by then, it was pretty clear that the market was going to hold those lows. I got short, didn't make a lot out of it. Did have another long a bit later on, only made for a few points. So all in all, it, it wasn't a very good day. It could have been a lot better. And that was purely because of the way I was biased. I shouldn't have been biased that way into the market, but I was. You should be sitting on the fence. It's either going to be a sell or a buy, and you're just waiting for evidence to stack up for either side and then take the trade, not thinking this is what I'm looking for to go long, and then you completely miss the other side. And once that move down's entrenched, it's kind of hard if you don't get that initial push. Okay, it's kind of hard to get short. You're taking a bit of a risk here because the market's extended. That could have easily had that secondary push down, hold up here, and then rally. So getting short there could have been a flush. You don't know. Okay, so that's the prime entry. These were just sort of later entries, which, after the fact, they actually played out quite nicely. Right, so that's pretty much all I wanted to go through. If you have any questions, feel free to send us an email to tradethestructure@gmail.com. If you do like what you hear, it'd be much appreciated if you can leave us a like and give us a thumbs up after the video. All right, guys, we'll speak to you again next time.